Hello and welcome to Trade Maestro. Thank you for joining us. We know your time is valuable and we take that very seriously. Our presentation will begin shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next hot thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was, and I just followed their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
Just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable. It's comprehensive. And it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, or cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning, and welcome to all of you, and welcome to Blockchain Basics. I'm Jeremy Whaley, your host, and it's great to be with you on this week of Thanksgiving. I hope you've all had a fantastic week. I hope that life is just going awesome for you, and you're ready to get the party started. We didn't have a show yesterday because I had some family issues. We had our kids doing a Thanksgiving thing with their school group. And I was expected to be there, and it was right smack in the middle of the day at lunchtime. And I was like, well, you only Thanksgiving once a year, so I guess I better do it. And that's why I wasn't here yesterday. But I'm back today, and it's great to be here. And we got some great stuff to talk about today. On our show, we're going to talk about some market updates, which is kind of interesting, right? Some great news coming out around XLM and stablecoins. We're going to talk about Polymarket, some really big news about that. And then I'm going to explain a little bit about consensus models and break that down. And then I'm going to go into what I call the market matrix, or the trading matrix. And I'm going to kind of lay the foundation for that and introduce it to you so that you have that to work on while we get into the Thanksgiving weekend ahead. And tomorrow, just to tease it a little bit here, tomorrow, I'm going to really feature a coin that we talked about last week called Texit Coin. I kind of introduced it to you briefly last week, and I've got some new information I want to share with you about that. So I'm going to do an extended presentation on that tomorrow. And you don't want to miss that. If you're looking for some really cool income opportunities in the world of crypto, you're like, hey, this sounds like a market I want to get into. Well, it probably is. And I got a great opportunity for you with that tomorrow. So I'll look forward to sharing it with you. With no further ado, let's do a market update and see what is happening in the world of crypto today. And it's another one of those days where it feels like everything is red, because that's kind of what the market looks like. But in reality, things aren't that bad. Yes, Bitcoin is down 1.3%, Ethereum down similar, Solana, kind of everything's down around the same. XRP and XLM down in the mid 2%. Whatever. You know what I was trying to say. Let's get over here to our charts. And apparently I went to some different charts here. So let's go to these charts. And what I want you to see, this is the chart we've been building for Bitcoin. I say it's not too bad because since we met last, since we had our last show on Friday, Bitcoin has bounced quite a bit, actually. Last Friday, we were looking at these long lower shadows at our pivot point, and that's exactly what we started to do, is build support at 84,000. We had a couple of really good days, and kind of peaked out here around the 88, 89,000 range, and today it's down just a little bit at 87. So that's why I say it's not too bad. If you look at where we are, we're doing exactly what I talked about last week. We're building that support in a critical location. Now, if this support doesn't hold, then we're looking at moving on down probably to 76,000 and possibly even lower than that. But I think 76 it's the best support. I think that one will hold. But that's the one that we've got our eyes on if this one doesn't hold. The good news is we're holding right now. And so far, so good. What you can expect moving into Thanksgiving here, this little red candle that you're seeing today, what could happen, there's a couple ways this could play out. One scenario is the bulls come in and they start buying Bitcoin, and we have a big thankful Bitcoin week. That's one possibility. Another possibility, and maybe a bigger probability, is that this little red candle you see today would turn into the beginning of a bottom that we would kind of keep pounding into this support. And we may actually do that for a long time. That's very typical with crypto. And so don't be surprised if we don't rally, like big time bullish move here. Don't be surprised if we kind of get stuck for a little bit, but it's building a support and it really starts to establish that. And if that's the case, long term, that's actually a really good sign. So I think either one of those two are the biggest probabilities in terms of where things could go. Of course, the third possibility is that the bottom falls out. It's always a possibility. But all things considered, I'm pretty pleased with how it seems to be structuring its support here. Ethereum doing something similar. It's a little bit below the line we drew here, but it's a reasonable spot where it's building that support. Since we're kind of new in this vicinity, we don't have really finely defined supports yet. It's very frequent that we would see a move like this. I'm just trying to look at my line here, and if you can see it, because as soon as I put my pin in here, the crosshairs goes off. So you get a choice, crosshairs or pin. You can see it there. There's actually a pretty good, I'll just mark it, how we do that. There's a pretty good pivot right here back in May. That was a resistance. I didn't mark it because it was running through all this stuff over here from February. So I had left that open, but that may in fact be the pivot. And we'll find out as it really defines it more. In all these cases, all of the cryptos for the most part are oversold. And you're starting to see your stochastics crossing up to the upside here, which is a good sign. Taking a look at XRP. Last week, I was telling you, this is your chance to buy XRP for less than $2. I was correct on that. We have only gone up since then. And not 20, but $2.20, what I meant to say. 217 right now. Your stochastics has definitely made the turn. We're back above our support level. I'm convinced this is the hard support for XRP right here. So I don't think we're going to see a whole lot of price action below that. That's right around $2.10. And if you get a chance to buy below that, I probably would pick up some XRP in that price range. XLM, on the other hand, holding strong around 24 cents, which I did also tell you that was a great price point a week ago. Now, here's the difference in where we are today versus a week ago. We're looking at XLM now. Remember, a week ago, I was saying, hey, I think we're going to find support down here. But would I buy at 23 cents? No, why not? I said I want to wait for the turn. Guess what we're seeing? The turn. So we are getting into the buying opportunity right now. I would say really any higher moves from here is a pretty good confirmation to start buying and picking up some XLM, some XRP, and how about some Solana? Oh, Solana is also putting a bottom in. A little bit lower than the support line that we had drawn, but once again, it's a reasonable support. So that's part of the thing with crypto. When you're dealing with markets that don't have as much trading history, when you're dealing with charts that, maybe we've been trading in uncharted territory for a while and it starts to pull back, we have to define the grid. And a lot of times the grid isn't there yet. And it just takes going through some of these market ups and downs to really define it. So it looks like we're starting to put that in here on Solana as well. We dipped down with a low of 121 on Friday, $121 per coin, and back up right now to 135, just a little bit off the highs from yesterday. So, all things considered, I'm pretty optimistic about where we are. And if we were to look over here at the crypto fear index from CoinMarketCap. I've been looking at this for a couple weeks here now. And you're going to notice we are at the all-time low for this index. The lowest value they've got printed here is reading, we were there last week, and we have bounced. We've made that turn. It's kind of hard to see. I'll zoom in on that. Let's see if we can zoom in. Can you see that? It's made the turn there. So there's never been a time in history on this index where we've gotten into extreme fear, and we bounced, and we stayed in extreme fear. That hasn't happened. It's always been the bottom of the swing. And I told you that last week, and I'm sticking to it this week. It's how sentiment indicators work. So that's where we are with the big picture market overview. If you got any questions on that, you want me to try to address it, type them in, and I will try to work them into my commentary and my presentation for today. But if there's no questions, which, how would I know? There's a little bit of delay. It's usually about a 30 to 45 second delay between what I say and what you hear. So, type it in there. I'll see if I can work it in. With no further ado, let's jump in and take a look at some news items and keep rolling for today. right, we got some crypto news. What is going on in the world of crypto from a news standpoint? Here's a pretty big story right here. U.S. Bank taps Stellar Network for custom stablecoin trial, backed by TWC and SDF. What does that mean? Well, U.S. Bank doesn't sound like much more than a bank in the United States, but that's actually the name of the bank. It's U.S. Bank. And U.S. Bank, not a bank in the United States, although it is in the United States, U.S. Bank has begun testing custom stablecoin issuance on the Stellar blockchain. Let me break that down for you. A major banking player in the United States by the name of U.S. Bank is issuing they're testing issuing their own stablecoin under the Genius Act on the Stellar network. That's XLM. As far as I know, this is the first that this has happened. It's marking one of the most progressive moves yet by a major U.S. financial institution towards programmable digital money. It's happening, folks. The stuff that we've been talking about here, it's all starting to happen. The development was announced during the Bank's Money 2020 podcast episode, Tokenized Future of Banking, featuring leaders from U.S. Bank, SDF, and PwC, yada, yada, yada. So then it goes into why U.S. Bank chose Stellar for the stablecoin. If you're not familiar, most stablecoins are not issued on Stellar. Not yet. But as I've been telling you, or different people I've been talking to, Stellar is positioned really, really well for this aspect of the market. They just haven't been as big of a player yet. So whenever we look over here at the chart, and I'm telling you, Stellar is a great deal, XLM is a great deal at 24 cents. I mean, XLM is a great deal at 24 cents. It's a blazing fast network. It's super, super efficient. I mean, I can just go down all the lists of it. And it's designed by some of the same people that designed the Ripple or XRP network. Yet, while XRP is focused on cross-border payments, XLM is designed more for what this article is discussing here. Specifically, XLM is going after emerging markets. So like in the nation of Fiji, the central bank in Fiji has really integrated heavily with the Stellar network. And a lot of nations like that are kind of underbanked are adapting into the XLM Stellar protocol. And so here you have a U.S. bank by the name of U.S. Bank that is adopting into it as well. During the podcast, he talks about all that. You guys can go follow it. But yeah, it's a really, really big story for Stellar and for XLM. And I think it's a big story for you guys as well. So go check that out. It's over on yahoofinance.com. Another story to cover today is Polymarket. If you're not familiar with Polymarket, they are basically a prediction platform, and they've been working to bring more advanced derivatives trading to the U.S. markets. Outside of the United States, in the world of crypto, you can go to Binance and a couple of other platforms, and you can trade pretty advanced derivatives. You can trade perpetual futures, you can trade options, all sorts of great stuff that here in the United States, our regulators have said, no, you can't do that. You can't do that. That's not cool for you. We know better than you. Well, guess what? We're blowing through all the regulation thanks to the Genius Act and some other stuff that this presidential administration has put in place. And here's the headline today. Polymarket secures amended CFTC order clearing way for trading in the U.S. What does that mean? The CFTC is the Commodity Futures Trading Commission. It is the regulatory agency that oversees futures. It oversees options. It oversees a bunch of that kind of derivative trading in the United States. Forex probably will eventually oversee whatever regulation happens. They'll oversee crypto as a whole. But this is big. This is the reason that we can't do derivatives in the United States. The reason we can't do futures the way we want to and options and all that stuff is because of the CFTC regulation. And here, Polymarket is working their way through it. So this is a big story. It's emerging. Big stuff happening here. Polymarket received amended order of designation from CFTC, paving the way for the platform to operate fully as a regulated exchange in the United States. Good stuff here. Okay. So what will that mean for us in the world of crypto? Well, I think we're still a couple years probably out from being there, but just imagine instead of just having futures on Bitcoin, Ethereum, imagine that we can do this through all of the primary crypto players. There's no reason we shouldn't be allowed to do that. There's no reason regulators should be getting involved in that. We should be able to go trade what we want to trade. They shouldn't say, oh, we know better than you. You can't do this. I don't think they should be able to say that. They're probably going to shut me down for saying that, but I think you should be able to do what you want to do. And this is a big step forward in that direction. So, big story there. Another interesting story is with MoonPay. If you're not familiar with MoonPay, MoonPay has created a really good on-ramp into the world of crypto. So you can go to a lot of DEX applications or individual hot wallets such as Exodus, such as Phantom Wallet. You can go to a lot of these hot wallets and you can actually buy and sell crypto right there in the hot wallet. Now, back in the day, we couldn't do that. Back in the day, you had to go to some sort of an on-ramp where you could actually get your money into a cryptocurrency like Bitcoin. And then you had to transfer that to a wallet. And then you had to transfer from the wallet to an exchange. It was very complex. And MoonPay has set it as a priority, as a part of their mission, to make the onboarding, the on-ramp from fiat, from the central banking world, into the world of crypto their priority. They are the vehicle for that. And they're doing a great job. I mean, I will say for the most part, MoonPay, I'm pretty happy with. But look at this. They have secured a New York trust charter. What? Expanding institutional crypto services. Okay. So crypto-focused financial technology company MoonPay has been approved to operate as a New York limited purpose trust company. This is big. This is really, really big, because what we're seeing again the regulations of the crypto starting to fall away. If you live in New York City, it's a pain in the butt to trade crypto. I mean, it really is. I have several clients from the New York City area, and I got one today that was just reaching out. She's trying to sell some stuff. It's a cryptocurrency that she owns, that she paid for, that there's no reason she shouldn't have access to it. New York is saying you can't sell that. Like, what do you mean I can't sell? Because you're in New York. But if I go across the border into Pennsylvania, I can sell it. Yeah. I mean, it's ridiculous what some of the New York regulations are. And, they have to, you can only do it through certain approved people over here. If you don't do it through our people, then you can't do it. Well, I mean, that's as communist as you can get. So for those of you living up in New York, I'm sorry you're dealing with that. But the good news is we're starting to see some of those regulations fall apart. And I think eventually the demand of the public is going to win. So I think that's a good thing. All right, I guess that is all I got for you from a news standpoint today. Big stories out there, XLM, US Bank, you heard that one. We got this one with MoonPay, the New York charter, and Polymarket securing some CFTC clearance. So all of that is really great. Lots of things happening in the world of crypto. I love seeing it. I know you do too. All right, what I'd like to do now for our crypto basics is I want to get in and talk a little bit about how consensus is reached. This is an interesting topic in crypto. I say it's interesting. It's actually a boring topic. Most people don't really care much about it, but it's a confusing topic. And so that's why people care about it. It's like, well, I don't understand. Why is this thing working like this? We're going to try to bring a little bit of clarity. I don't know how much I can bring. We're going to try to bring a little bit of clarity to this. And hopefully we at least move the needle in your comprehension on that in our crypto basics today. In the world of crypto, we call it consensus. What is consensus? Consensus is when two computers agree on something, or, it doesn't have to be computers. In the world of crypto it is, but, if two individuals agree on something, Bob and Larry look at something and say, I agree that these two pieces of information match, that would be called a consensus, right? And so in the world of blockchain, what that means is it means that we have two or more computers agreeing on the data that is printed in that blockchain. Now, a couple weeks ago, we talked about the ledger, and we talked about how each blockchain or each block on the ledger is basically let me say it different. Each block on the chain is basically a ledger, a transparent ledger, where people, where the computers write and document all the things that have taken place in the ledger. That's what a block is. Now, the question is, how do we know that that information is accurate? And the answer is consensus. Consensus. Now, it's not hard to validate and prove. Validation and proving that something took place, that part's not difficult. That's really, really easy. Securing it and making sure that there's no fuddy-duddy going on there, there's no, hanky-panky, nothing weird, that's where it gets complicated. And that's why blockchain is unique, because they created this mechanism where it takes a lot of work just to get to the ledger, just to get to the ledger where you can write the information in there. That's what takes a lot of work. And it takes so much work and so much expense to get there that there's no real benefit in cheating. In fact, it's the opposite. It's like, because you got let in the room, because you have the ability to come in here and be the one who has the privilege of documenting this in the ledger, that's the special thing. It's a privilege. It's not like we're going to go in here and just meddle with it, because there's no benefit in doing that. And that's part of how they secure the blockchain. So when we're looking at consensus, what we're trying to do is we're trying to get 2 machines or 3 machines or multiple machines to agree on what's on those ledgers and say, yep, we agree, this is here. But again, to get into that arena, that's where the mechanism of difficulty comes in, which we'll talk about in just a second here. Think about this consensus spreadsheet, basically like a giant shared spreadsheet, and a bunch of people are looking at it and they can agree. They say, yep, that's what we see on there. Now, I just mentioned that it takes a lot of work to get there. Who gets to present it? Who gets to say, hey, we solved it. We're going to present that we are writing in here that Jeremy transferred 0.00001 Bitcoin to Larry over here. I mean, see, it's like, really? You get the privilege of doing that? That doesn't sound like a very big privilege. It sounds kind of boring, right? Well, one machine gets the opportunity to present that and actually say, here, we're going to validate this right here. But in order to do it, in order to make that presentation, they have to do a lot of work. And that's what the process of blockchain mining is. The process of blockchain mining is doing the work so you can get into the arena to document the spreadsheet. So one machine gets the opportunity to present the block, and in exchange for presenting it, they get rewarded with the crypto. It took them a ton of work to get there. Therefore, there's no real benefit in cheating it. All right, the other machines, all they do is they verify it, and they get a little bit, but they don't get paid to verify. You get paid whenever you mine it. And like I say, you have to earn it. So how do we earn the crypto? This is what I was trying to get to. How do we earn the crypto? There are 3 mechanisms that are pretty popular. There's other mechanisms out there, but 2 that I really want to focus on right now, and 1 in particular, and that's the proof of work, because this is the mechanism that Bitcoin uses. Proof of work, proof of stake, and proof of authority. So I'm going to hit on each of these really quick and at least open up the conversation. You may have some more questions after it you can ask, but at least get the conversation going. Okay, so what is proof of work? It's basically what I just described to you. It's whenever you have multiple machines that are competing to solve a puzzle or to solve an equation. You say, that sounds stupid. It is kind of stupid in theory. But in practice, the reason it's practical, the reason it works, is because the bad guys have no incentive. There's no incentive to come in here and hack into it just so you can present bad data and corrupt the database. It took too much work. It took too much literal energy, and I'm talking about energy as in electrical energy. It took too much computational computing power, and there's no benefit for getting in there and not being authentic. There's zero benefit. In fact, it's so much work that it's like, I would rather walk on my hands and knees barefoot with my feet barefoot across 25 miles of glass than hack into this. Like, it doesn't actually serve them. It's just too painful and too much work. And by making it that painful and that much work just to get into the arena, what they've done is they secure the network because it's too hard. It's too hard. It doesn't give them any benefit. Now, this is a little bit weird for you and me because you and I aren't cryptologists. You and I, well, you might be. I'm not a cryptologist. But I don't operate in this world. Most human beings don't operate in this world. But in the world of cryptology, in the world of making things too complicated and too difficult to hack, this solved an enormous problem. And so what you have is you have machines that are competing to solve these puzzles, solve the equations, and when they solve a certain piece, imagine a big jigsaw puzzle. Okay, and you know how if you like dump out a 5,000 piece puzzle, what my mom always taught me was, well, you start with the edges. You know, you can at least start somewhere there, and you kind of get the areas that are pretty easy to solve first. That's what all these computers are doing. So they're all out there trying to solve the puzzle. And when you solve a piece of the puzzle, you earn what's called hash. Hash, and no, I know what some of you are thinking. Hash just means that you earned a little bit of the puzzle, and then when the whole thing is solved and the whole thing is completed, the computer or the pool that has solved that, guess what? They get rewarded the Bitcoin. Well, right now that reward is pretty steep. It's like 3 Bitcoin. It's like $450,000 or $400,000, something like that. Well, when Bitcoin was 125. Now that it's at 80,000, it's a little less valuable, but it's still 300 grand. But it's a big reward, right? It's a big reward if you can solve the puzzle. That's why people are competing for it. But now once you solve the puzzle, now that you got your big reward of Bitcoin, what do you do with it? Now I have the right to document the ledger. Now I have the right to put the information in there. Jeremy sent 0.000001 Bitcoin to Larry. Like, man, all that work just to put such an insignificant ledger entry? It's like, yeah. That's why it's secure. That's why it's secure, because there's no computing power, no energy power that's worth putting that much effort in there to corrupt it. It doesn't make any sense. And then once the line is put in there, you say, well, okay, if somebody really wanted to hack it, they could put bad data in there. You're right, they could. That's where the consensus comes in. Once the line is put in there and the block is documented, now the other computers have to look at it and say, I agree. I agree. Jeremy really sent that over there. What if a bad node is put in there? What if a bad ledger entry is put in there? And all the other computers look at it and say, no, that didn't really happen. We spent all of that work, all that effort to document this on the blockchain, and it was fake. And these other computers caught you. You see why it's secure? This model of cryptology, it secured the data better than anything we've ever experienced in world history. Because it takes too much work, it takes too much computational power, it takes too much electrical energy just to get in. Much less now you got to get past the security. Now that we're in there, we got all these systems of checks and balances that are in there. And that's why they say that the blockchain is the most secure form of data ever. Because it's just too hard. That's why it's secure. So with proof of work, machines compete to solve the puzzles. The winning machine wins the coin. Then the other machines verify it. And that's how Bitcoin is mined. Now, I'm talking about Bitcoin here, but that's also how Litecoin is mined. And there's several other cryptocurrencies that are out there that are mined using proof of work, just like this. This very situation I just laid out there, all these computers competing to solve the problem, solve the equation, earning a little bit of hash along the way until somebody, one computer, solves it. And then they win. They get their coins. And now everybody else validates it. They're like, yep, that's true. Yep, that's it. Check, 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 check. Yep, it really happened. Okay, done. Next. That's what the mining process is. That's why they say, oh, you say Bitcoin has no substance behind it? Have you seen the server farms? Have you seen all these rooms, these huge warehouses with huge cooling mechanisms just to get in there and have enough computing power to go in and solve the puzzle? That was a lot of work. It wasn't work you were doing. It was a work a machine was doing. But how is that different than an assembly line at a automobile plant. Yeah, you got workers there, but you have all these robots that are moving all this equipment, and that's work for those robots. And the people are there kind of telling them what to do and guiding it. But, that's what modern industry is all about, right? Using machines to make the working process easier. In fact, it's so complex that no human could ever solve that puzzle, which is why the computers have to do it. But, there's a lot of work. There's a lot of work. There's a lot of expense and energy. There's a lot of expense in the machinery to get there. I've been doing some research on Bitcoin miners. And what I found, I live in Middle Tennessee. It turns out our cost of electricity is so high that it just doesn't make any sense really to mine Bitcoin in the state of Tennessee. It costs us about 12 cents per kilowatt hour, 12 to 13 cents where I'm at. And over in Texas, for example, you can get the same energy for about 3 to 4 cents. So a fraction of the cost. So what I was looking at is, if I want to mine Bitcoin, I could actually employ a hosting company in Texas, and I can send them my Bitcoin miners, and they'll host it, and they'll make sure everything's taken care of, and I'll pay them the energy, and I can actually make money. But I'm still only going to make for one unit like $100 to $150 a month. I'm like, that's not a lot. After I pay all the expenses on it, how much does that unit cost? Oh, it costs $9,000. Oh, when am I going to break even? Oh, in about 2 or 3 years. So Bitcoin mining, why would I want to do that? Like, it's not a venture that me as a small individual can go compete in. It's gotten too oversaturated. It's too expensive. It's too hard now. That's why it's a big money game now. Now, there's other ones that are out there that you can still get into, and we're going to talk about one tomorrow, a project that I found that I'm pretty excited about. But I just want you to understand that this whole concept of mining, this whole concept of proof of work, of saying crypto doesn't have any value, it does, has a lot of value. It's a lot of machine work. It's a lot of energy that went in to producing those coins. And as there's demand for it, that's where the value comes from. Now let's compare that with something they call proof of stake. And I'll roll pretty quickly through this. Machines, in this case, stake the crypto that they have, and the crypto has value. So let's say you have some Ethereum, and you say, well, I'm going to stake it. I'm going to put it up here. I'm like holding it up as collateral. Well, if you put up money as collateral, that's got value, right? That's called staking, putting it up as value. And in some blockchain models, what they do is instead of proof of work, which is the Bitcoin model, it's the mining model. Instead of that, what they do is they say you stake up value. You hold collateral up. And when you put the collateral up, now you've earned the right to get in the room and document the blockchain. And then the other machines come along and confirm. So basically the largest stake wins, at least the largest stake that's available at that time. This is the way that Ethereum is mined, and many other blockchains are mined in the same fashion. So if you look at that, you say, well, that could be more efficient, less energy use, that's for sure. But now we kind of go back to one of the things that blockchain and specifically Bitcoin was trying to get away from, which is the big boys always win. It's easy to buy your way in to be the largest stake, right? So yeah, the big boys are always going to win. And that kind of takes away some of the decentralization of it. Because if you have enough money, you can be the big boy. But that's the proof of stake model. Then there's another variation called proof of authority. And with this, you basically have a group of trusted notaries, digital notaries, that sign off on the transactions. And it's fast, it's efficient, typically done with private blockchains because it's really not decentralized. It's efficient, but it's not decentralized. And that kind of takes away from some of the central message of what we do for blockchains. So that gives you an idea of how the consensus mechanisms work, how the validations work a little bit, and more importantly, how you mine the coins. And what I really wanted you to understand is the proof of work model here. I wanted you to understand that there actually is effort going into it. There's real work going into it, and that's why there's value behind it. One of the reasons there's value behind it. And that's why people are out there literally building huge warehouses with enormous air conditioners, because these things put off serious heat, and mining Bitcoin. It's one of the reasons they're doing all that work. To give you an idea how much energy it takes, because like I said, I've been researching this, One single Bitcoin miner that I could put in my house uses as much or more energy as my entire house does every month. And you say, well, okay, well, what does that mine for me? Not very much. Not very much. It ends up costing, based on my numbers, ends up costing about $300 to $350 a month in electricity here where I live to run that Bitcoin miner. And I would end up mining, depending on the price of Bitcoin, about $300 a month worth of Bitcoin. So it wouldn't be worth it. That's why if you can cut the energy cost in half, you can go out to Texas or Oklahoma and you can actually make $100 or $150 profit instead of spending it all on energy. All right, now you understand. Hopefully you understand. I want to talk about the trade matrix in our next segment. How do you get the edge in identifying trades? And today what I want to share with you is how to build a trading matrix or the market matrix. This actually comes from a presentation I did a couple years ago called the Market Matrix, Decoding Price Direction, Targets, and Trends. If that sounds interesting to you, it is, because it's really good. And it's the way that the market shapes up. But what I want to do today is I want to go into one aspect of this, and that is basically the framework of how price action is contained. Think about this like the framing of a house, the studs of a house. What do the studs do? Do they define the house? Yeah, they give the structure to the house. Does it make the house livable? No. But you can't have the house in a livable condition until you've put the framework up, right? The framing goes in. Now you can see, oh, there's a wall that goes here, there's a wall that goes over there. We're still not ready to move in. We still got to go in and sheetrock it, put the roof on, put the carpet in, the hardwood floors, whatever you're doing, paint it and make it a home. But the framing, the wood studs, they give you the boundaries of where this house is. And in the same way, that's what your support and resistance do in trading, whether you're trading stock or whether you're trading crypto. Okay, so how do most people pick a stock? How do most people pick I should just say how do they pick a trade? The answer is, instead of just a stock. Sorry about that. I forgot I'm talking to just crypto people here. How do people pick a trade? And the answer is, for most people, it's emotional. For most people, they buy a stock or they buy a crypto and maybe the trade's going up. For example, I talked to somebody yesterday and she and her husband got into Bitcoin just not too long ago, a year ago, year and a half ago, when it was like 20,000, 30,000, whatever the price was back then. And she's pretty excited about it. She's like, yeah, we bought all this Bitcoin. They had a few, they had 3 or 4 Bitcoin, and pretty excited about it. And as it went higher and higher, she saw it hit 50,000. She freaked out. She was like, I'm going to start selling. So she sold all of her Bitcoin. She made 100%. It was great. Good job. Happy for her. Problem was that resistance did not hold as resistance, and Bitcoin continued going up, and eventually it went to 100,000 and then 120,000, 125,000. And she's sitting here on the sideline like, well, where do I get in? I just missed my opportunity. And that's the way most people trade. Other people trade this way. They see the opportunity. They see the price going really, really high. They see it's at 100,000 and they're like, I got to get in. They buy it. And then as soon as they get in, it's like the price goes down. They end up selling too low. I have another friend that just reached out and he was thinking about selling his Bitcoin. This was just last week. He's like, it's gone way down. I think I should sell it. It's like, why would you do that? You're at the bottom. Right now, you're at the bottom. He's like, yeah, but it's been going down. I know, but you're being emotional about it. And that's what most people do. Most people, when it's high, they think it's really good, so they jump in. And when it's low, they think it's bad, so they get out. And in reality, it's the opposite. In reality, what they're doing is they're just playing the emotional game. So what you inadvertently discover in this whole process is this concept of support and resistance, where buyers show up and where the sellers show up. And the people that are on the other side of that, they're basically, I don't want to say the chopped liver, but they're the ones that are getting eaten for lunch, right? So we don't want to be the guys that are getting eaten for lunch. We want to be on the right side of the trade. I'll remind you, we've already looked at this definition, but support is the price point where a trade finds more buying pressure than selling pressure and drives the price. The buying pressure drives the price of the trade higher. That is the support level. Think about support like a floor. It goes across the bottom. It's where you find support, okay? Now, resistance is the opposite. This is the price point where a trade finds more selling pressure than buying pressure, and the selling pressure drives the price of the trade lower. Think about resistance as a ceiling. So you have a floor and you have a ceiling. Floor and a ceiling. The floor is the support. The ceiling is going to be the resistance. And as we move up into resistance, move up into the ceiling, boom, we hit our head, and we find that it's hard to break out. As we fall down to the floor, we find support, and boom, we can stand strong on that support. That's the idea of support and resistance. And what this does is it creates market structure. This concept of support and resistance, it is the basis of market pricing structure. People always think, oh, market price has to do with fundamental value. Market price has to do with what the core essence of the value is. No, it doesn't. The sooner you get rid of that idea, the sooner that you can actually go out and trade and make a profit. Market pricing is a function of human behavior, human psychology, and how people feel about the trade. And this concept of support and resistance is where we find those boundaries. The idea of where the buyers show up, where the sellers show up. If you can learn to identify these key price points, which we call pivot points, then you can and you will beat the market. So let's work on how do we identify them. So here's how we start to build the matrix. In reality, what you need to understand is all trades move in three directions. All trades move in three directions, and you must be prepared for all three of them. Do you have any idea what the three directions are? I know, you couldn't guess, right? So I'm going to tell you. The three directions that all trades move are up, down, and sideways. Take a look at Bitcoin. Notice part of the time the price is moving up. Part of the time the price is moving sideways. Then it's up, then it's sideways, then it's down, then it's up, then it's sideways, then it's down. At any given time, any trade in any market, whether it's a cryptocurrency or a stock trade or a Forex trade or futures or anything else, it is always going to be moving in one of three directions. It's never going to move more than one direction at the same time. It's going to be one of three. This is how we get our probabilities. This is how we know you got a 33% chance of the trade going up, 33% chance of this trade going sideways, 33% chance of the trade going down. That's how we know when you buy into a trade, you've got a 66% chance that it doesn't do what you want. How do we know these statistics? Because we understand that there's only three directions that the trade can go. So understanding that there's only three directions the trade can go, the question becomes, how do I know which direction the trade is going? And using the principles of support and resistance, what we can do is we can build a grid or a matrix of the turning points where the trade will change direction and start to move in a different direction. And of course, the conversation around that is what we call support and resistance. So what I want to do today is I want to teach you how to draw support and resistance. And the first thing we're going to do is we're going to start with a line chart. Start with a line chart. And if you've never looked at charting before, charting software, you're going to notice that there's three primary different types of charts that we use. I'll show them to you in just a moment here. There's three primary types of charts. There's a line chart, a bar chart, a candlestick chart. Those are, for the most part, actually today, in 2025, it's mostly line charts and candlesticks. Not a lot of bar charts going the way they used to. But start with a line chart of the three types of charts. And then we're looking to connect at least 2 points. This will make a line or a trend. 3 points, establish it. And the more you can get, the better. Then once we're done, once we've marked the whole thing out, then we're going to flip over to our candlesticks and we're looking for more detail and more confirmation. And that's really it. So you can take a screenshot of that right there. This is the process. And what I'm going to do on the next step here is we're going to walk through it. So I'm coming over to our charting software, which is TradingView. And what I want to do is I'm actually going to take, let's see, which one do we want to do? I could do XLM. I think I'm going to do it with Solana. Let's get rid of all of our lines on Solana. And I'm going to chart Solana from scratch, as if I've never traded it before, as if I know nothing about it. And so before I do that, I'm going to zoom in and I'm going to show you the three different types of charts. Okay. Now, last week on Friday, I introduced TradingView to you as a software, and there's a big Black Friday promotion going on right now. I didn't think to put the link in the description, but hopefully I'll go back and do that. And this is a perfect time for you to buy TradingView because you can get a great deal on it. Really fantastic deal. But let me kind of break down what charting views look like. and then we'll kind of walk through this here. So I said there's 3 types of charts. Before I get into the 3 types of charts, there's 4 key points or 4 key price points that every chart is based on. And it's the OHLC. That's the open price of the day, the high price of the day, the low price of the day, and the closing price of the day. OHLC. So open, high, low, close. These are the 4 key price points that every chart is going to build its data set on. So whenever you look at a stock chart or a crypto chart or any other chart, it's going to be based on these 4 key price points. Okay. Now, the way that we map those key price points, if you have a line chart, all the line chart is doing is taking the closing price of the day. So let's say on this day we closed at 160, and the next day we closed at 170, the next day we closed at 180, and then 170, and then next day maybe we bumped up to 190, and then maybe we had a big day, we went to 240, the next day we collapsed down to 210. Those are the closing prices of the day, okay? Every day it closes, and if you just came along and drew a line connecting the dots, like the old game Connect the Dots, remember that game we used to play as kids? If you did that, you would have a line chart. And I just drew a line chart for you right there. That's how a line chart's constructed. It's really simple. Of course, you never have to deal with it. You just use the charting software for it. But that's how a line chart is constructed. And if I were to flip this chart over to a line chart, you'd say that looks really simple. And then you know how it works. Every turning point on here is the closing price of the day. That's how this chart is constructed. Now, you may notice that, oh, that's only using one of the 4 price points, and you would be right. So let me introduce you to the next type of charting, and this is something we call bar charts. And with Western bar charts, the way they break it out is on the left side, you have the opening price of the day, and then you come down to the low price of the day, you trade up to the high price of the day, and on the right side, you have the closing price of the day. And this is called a bar chart. Okay, and every day that the trade transacts, you continue to market, always moving left to right. So if you see a bar that looks like this and the little right markers on the bottom, oops, I put a H there. It should have been a C. Forgive me. Little markers on the bottom, you know, it's a lower close than it was an open. But as you can start to see, it's like that starts to become kind of complicated. In fact, you know, I can't see a lot of color with it. I do on mine because it's colored, but for the most part, let me show you what a typical bar chart looks like. I can't really, I'll just do it this way. If they're all the same color, that's a typical bar chart right there. Typical bar chart looks like that. Everything's the same color, and you've got the price data, but it kind of all blends together. If you zoom out, you can start to see that, okay, yeah, that looks like a nice little bar chart. That makes sense. And I understand this. I can see chart patterns. You can see a lot of stuff on a bar chart like this, but as you can see, there's not a lot of clarity to it. I mean, it starts to blend together pretty bad. So that's why today we add color to it. But that color actually comes to us from Japanese candlesticks. And last week I introduced you to candlesticks, and I'll give you a quick overview of how candlesticks work. So when we're looking at candlesticks, the way that they're drawn is we have the same key price points, the open, the high, the low, the close, but we have a real candle body. And we open at the bottom of the candle body, and we close at the top of the candle body in this particular example. And we draw our low and our high price the same way on the vertical axis as we do for the bars. And there's your candlestick. Now, the difference is if you have a down day, we have an opening price up here, let's say, and your high price is the same, your low price is the same. But let's say the closing price is lower than the opening price. We fill that in, just like this right here. And this comes from the old rice traders in Japan. And that's how your candlesticks are constructed. Okay, so the difference between what we call a open candle or a hollow candle and a closed or solid candle is just simply the way that it is constructed. If the closing price is higher than the open, you have a hollow candle. If the closing price is lower than the open, then you have a solid candle. You color it in, and that's why the candles look that way. Now, When you put that onto a chart, it looks something like this right here. You can see how they're constructed there. And since I have a black background for my charting, that's why the back of these candles, some of these, the hollow candles, looks black. They're not really black candles, they're hollow. There's nothing in them. They're just open to the closing price. Okay, so that's how candlesticks are constructed. Makes sense? Of course it makes sense. Excellent. Now, what I will say this one thing since I got the charting open, since I have it open, you'll notice that my candles are kind of more hollow in here because that's the way I learned to read candles. That's the appropriate way to do them. Today, you generally will see this right here. You'll see red and green candles, and they're all solid, and that's wrong. And for somebody like myself who learned this the old school fashion, with solid and hollow, this really plays with us because I see green candles that are solid. That's all I see. I don't see hollow candles. I see green that are solid. And that really plays with my psyche. Some people have made fun of me for that, but sorry, get over it. This is how I do mine now. I do like the red and green. It looks like a little bit like a Christmas tree, but I like it. But I have to have my candles hollow or else I can't interpret them. I can't read them. Okay, so that's some basic charting 101 for you right there. Now, with that said, let's come back to how do we draw our support and our resistance. And I'll go back through the rules for you. We're starting the line chart. We're going to look for 2 or more points to make a line, 3 or more points to establish a trend. After you mark your charts, flip over the candlesticks for more details. Now you understand what that means a little bit. Now you understand that the line chart is the one that looks like this, and the bar chart is the one that looks like this, and the candle chart is the one that looks like this. And the line chart has only the closing prices. So what we're going to do is we're going to zoom out as far as practical. I usually like to do several years worth of data. That's what I like to do. If your screen's really small, you may not be able to do that. In this particular example for Solana, there's not that much data. We only go back to July of 2021. So this is a pretty easy one to chart. And the first thing I'm going to do, let's make this full screen so you can see it. The first thing that I'm going to do here is I'm going to go to the top and the bottom and I'm going to mark a line. Now in TradingView, I use this horizontal line. Well, I would use it in any charting software, but I use a horizontal line, and you'll notice if you can see it in here, when you click on the little breakout menu item here, and you come to horizontal line, there's a key command, Option H. If you are with your crosshairs tool, that's just your tool you can grab it and draw with. If you have that tool open and you press the key command on a Mac, Option H, it will snap that horizontal line right in there for you. And that's how I do that. Just boom. And I'm going to put that at the top and I'm going to put it at the very bottom. And what that does is it starts to frame our chart. It gives us the extreme boundaries. Now, the next thing I'm going to do is I like to work from the bottom up, but you can work from the top down. It's fine. I'm going to come through and I'm going to look for at least 2 or 3 points that connect here. And you can see right here, I'm going to draw a line. There's several points that connect here. Number 1, right over here, we had 2. And you say, well, the second one was lower. I know it was lower, but I'm looking to the right and I'm seeing that right in through there, all that connected, right in through there, it all connected. And because all that was perfect, I'm giving this one a pass. And that tells me where that pivot point is. Okay, now I'm going to do that going up and down, and I'm going to mark all my major pivot points where I see a lot of either congestion happening or I see a lot of turns happening. So I'm going to show you what I'm looking at right here. And I'm going to kind of massage the line to kind of get to where it is in the middle of the majority of the action. Okay, so right here, I've got that turn. I got that one right there. And I had some more junk here, but it never quite defined the turn. Okay, so that's how I'm going to do that right there. Next, I'm going to continue working from the bottom up, and I'm looking left to right, left to right, left to right, looking for major turns, and I found one right here. So I'm going to go ahead and mark that on the chart. And let me show you what I'm looking at. So over here, I'm looking at that connection. There's a connection right there. There's a connection right here, and there's almost a connection right there. See how that works? And I'm going to keep working my way up. And all I'm going to do is I'm just going to do this for all of the major turns. Now, there's some junk that's happening here around 92.80. but it's not well defined. And I'm going to try to keep my charts a little cleaner and not do all that. So as I keep raising up, you're going to notice right here, this was a major turn in April of this year. And there's not a lot of other turns that happened there. Let me show. That's a major turn because it ended a major sell-off. There was junk here, a lot of congestion here. But that was the Lone Ranger where it actually connected. That's okay. I'm going to put that on the chart because it was a major, major turn. Okay, otherwise I'm looking for more of the minor turns. Now right here, this is a pretty major pivot area for several reasons. I'm going to go ahead and mark it. Oops, I pushed the wrong button. I did Command H. Oops. Oh no, what have I done? Oh no, it's all disappeared on me. Found it. I need Option H, not Command H. There you go. All right, what I was going to show you before the forest took over, right through here, you can see there is just a ton of action right on that turning point right here as well. Almost right here. And definitely right here. Now you got some other spots that just blew through it. That's okay. You're just ignoring that. You also have more connection right here. That right there around 125 where I just marked that, extremely major turning point. You can see how much was happening right there. And even as recently as this week, we managed to find some support there. Okay. So let's continue moving our way through and zoom back out here. As I work my way up, now you notice there's a lot of congestion that happened here in the 150, 160 range, but not really clean turns. In the middle here, well, I'm going to ignore that for now. I'm going to come on up to where we can get major, major turns marked. And about right here around 183 is a major turning area. Let me show you what I'm looking at. Right smack in the middle, 1, 2, 3, 4, pretty much right on that price point. And then I got a lot that are pivoting around it, but maybe not turning exactly on the price point. Very, very major turning point there around 183. Okay, so that's how that works. Then we keep working our way up. And this one right here is going to be a major one for us. So we'll mark that sucker in there. And that pretty much maps out the majority of the major turns. I put one more in here, highlighting that spot. There's a lot of junk in here and highlighting that spot. That, ladies and gentlemen, is how you map out the matrix and you start to chart your trade. This is Solana. Now, once you see that, how much easier does it become? It becomes a little bit easier looking there like, hey, I got some boundaries here. I know what I'm working with. But what we want to do before I go to the next step is I want to confirm by looking at our intraday candles. Now remember what our line chart does is our line chart just draws the closing prices of the day. What our candles do is they show us the intraday highs and lows. Okay? And that's going to give us additional information because what you'll see a lot of times is intraday, something that didn't connect, actually ended up connecting intraday, something that didn't connect on the daily closing price. So look in these areas where there's a lot of congestion and you'll see additional confirmation. So I circled some areas here. Let's see what we get when we flip over to our candles. And see if I can shift this up a little bit to align with my, there you go. Look at how much confirmation we have in here. Oh, I just deleted it. Sorry about that. But at each of these major turns, my apologies. Sorry, I'm going crazy in my scaling here. At each of these major turns, you'll notice there's even more intraday touches. 1, 2, 3, 4, 5. This one almost came down to this pivot area. You got all these intraday touches. That just tells you all the more I really drew the line in the right spot. Now, what a lot of people are going to say is they're going to say, well, why don't you just start with a candlestick? Why would you start with the line chart? And the answer is because if you started trying to draw the lines on the candlestick, unless you really know what you're doing, you're not going to draw all the right spots. You'll have the lines shifted one way or the other just a little bit. By starting with and drawing your lines with a candle or with a line chart instead of a candlestick chart, you're really able to see the fine turning point of where that trade turned. And you can start to put your support and resistance in there. And then we can flip over to our candles. And now with this new freshly charted price on Solana, how clean does that look? And the answer is, looks pretty darn clean. I got a pretty good idea. Now I can sit here and do a trade setup and I can say, well, looks like we've traded down to support. And if I make my turn, which it's starting to do, and let's say I were to enter here, where would my next target be? Probably right here. And how would I know if this trade has gone against me? Probably if it drops below this support. So we'll put our stop there. We've got our entry, we got our target, and we got our stop. We have all three of the major price points that we need for our trading plan all right there. Look how easy it becomes once you can see the matrix. Now, I did this on Solana. There's not a lot of history on Solana, but I've done this with about this much price data on, you know, some really old trades, stuff like ExxonMobil, for example. And if you did this with about 4 or 5 years, even 10 years of trading data on ExxonMobil, and then you scoot the chart back, you'll see that these lines, the ones that we just did, actually go back in time in many cases for decades. Almost like it was planned. It's like a matrix. It just all fits together. And this, ladies and gentlemen, is how you start to define and identify the structure for your trades. Once you understand this, you're no longer guessing. Now we see with Solana, we're at support. And we can look down at our stochastics. We can say it's oversold, starting to cross up. This could be a really good time to buy. And we can use our logic and we can say, well, if it trades up to the next pivot area, that's where I can take some profit. And if it drops below this support level, I'll get out and I don't have to go down with the ship. Ladies and gentlemen, that is how you draw support and resistance. That's how you map out a chart that you've never traded before. That's how you understand where the trading matrix is. Let me know what you think about that. I have much more I can teach you about this topic, but we are out of time for today. So we're going to wrap it up. If you got any questions, please feel free to type them into the chat or into the comments here. And if you would like to learn more, all you need to do is find us over at trademaestro.com, trademaestro.com. If you haven't done so already, please like and subscribe to the channel. Follow us over on Rumble. It's rumble.com/trademaestro. Over on YouTube, it's youtube.com/trademaestro. Thank you for being here. I will be here tomorrow. As I said, I got a special presentation for a brand new Layer 1 blockchain we're going to talk about tomorrow. We will not be here Thursday. It will be Thanksgiving. But thanks for being here today. I wish you the best. Hope you have a great afternoon. And until next time, happy trading. We'll talk to you soon.